never slow up, no I don't take shit. I got no love for the fakeness. If you wanna play tough and wanna hate this, I'll always show up. I don't ever slow up, no I don't take shit. I got no love for the fakeness. If you wanna play tough and wanna hate this, I'll always show up.
What's up YouTube? Welcome to CHOCH of the Bushveld. This is our first official video with a voiceover. Have a look at the first test video we posted 9 days ago on the channel. Smart money concepts, trading euro, US dollar, and how to get high R&R on forex pairs. Let me know what you think. Drop a comment in the comment section. You can pop us an email if you have questions. And yeah, stay tuned for more videos on the channel. If you are new to the channel, or if you have been watching, or if you know myself personally and those involved with the channel, you would know that we are quite passionate about smart money concepts. So to get straight to it, today's video, I'm going to teach you how to trade off one of the best entry models on any given market. Okay, we're going to focus specifically on indexes. So your NAS100, your Dow Jones, US30. And what I'm going to do is take this concept and simplify it in its simplest form for you to understand, and avoid the whole overcomplicating of Wyckoff. Now, smart money concepts, guys, this is institutional order flow. We know that banks, hedge funds, these are pretty much the only people or role players in the market that can shift price. Okay, us retail traders, we do not have the kind of money that can shift markets. And what I'm going to be teaching you guys today is how to use a CHOCH when looking for entries, and what time frames to have a look at. And what we'll do is break it down a little bit. But now, if you are new to this concept, I would like to encourage you to just keep an open mind. Everything you've learned on YouTube thus far on retail methods such as trendline trading, trading support and resistance, break, retest, your Fibonacci's. Smart money concepts is clean chart trading. There is no indicators. There are no moving averages. I'm going to teach you how to approach this with a completely new methodology. And after this video, you should have a completely different understanding to price action and what that actually means. Okay, now CHOCH, change of character in order flow, is Wyckoff Simplified. Okay, so you'll see a lot of Wyckoff teachings online, which can be very complicated. And basically, your CHOCH is going to be a break of your AR on Wyckoff, your automatic rally, usually with signs of strength or weakness. And I'm going to show you now how to approach that. But first things first, we understand that, and we know that price action on any given market is not linear. Okay, basic order flow is fractal. Impulse correction, impulse correction. Now, think of this for a second, okay? The market volume on any given day is anywhere between $6 and $7 trillion. It's a known fact that these markets are mainly controlled by major financial institutions, like I mentioned, banks and hedge funds. Now, because of this, and I've mentioned it already, it's only really these role players that have the liquidity that can shift price. Okay? Markets are being hedged on a daily basis by these institutions, meaning they've got buy and sell orders in on any given asset at the same time. Okay, think about, here's a classic example. Heathrow Airport, UK. People are flying into the UK every single day. People are flying out. If you're coming from the US, you're going to need to buy pounds in exchange for your dollars. And vice versa, going from Heathrow or the UK to the US, you're going to need to sell your pounds in exchange to buy dollars. So people and financial institutions around the globe are buying and selling the same assets or the same pair at the same time every single day. Okay? Natural order flow works as such. Let's say the market is trending in bullish structure. Okay? Hypothetically, or just for purposes of this illustration, let's say the banks are buying $4 billion. It's pushing price up. Okay, they've got sheer buying volume and power. There's $4 billion in buy orders, which is pushing market in bullish structure. And then market opens, and all of a sudden, you see price action start tanking, falling. It's safe to say the banks have now opened a large number of orders in sell positions, which may outweigh the buy. So it starts pushing the market down quite aggressively. Now, would you not agree that it makes financial sense for the banks to close their buy orders up here, as opposed to letting it come down here where entry pretty much was before they close their buy orders? Okay, they're only going to be making a profit on this little piece over here. It doesn't make sense. Okay, so what they do is they will go and they'll push price down. They will add buy orders to push it back up. Basically, price will come and mitigate their losses, and not really losses, but pushes price back up. And what they'll do is they will close their buy orders over here alongside the new buy positions they put in here, and then they'll add sell orders in here and let that offset the loss they incur over here. So let's say they close $3 billion in sales here, leaving $1 billion, and they've also closed the extra, let's say, $2 billion they added here. This $12 billion in sales is going to outweigh the loss they incur on the $1 billion buy orders that remain here. Okay, think about this. This isn't 100% factual, but it's something that I would like you to just think about for a second in terms of natural order flow. Okay, now here we come to the good stuff. If you apply this on any given market, I can tell you now you're going to rule out 50% of your losses. Okay, I've said already, change of character, Wyckoff Simplified. This is a smart money concept. Okay, now this change of character is going to be your footprint left by the banks. Remember, we are not trying to predict if the market is going up or down. We are merely reacting. Okay, so we are not predictive trading, we are reactive trading. Now, when the market is forming a bearish structure, okay, on indexes, you want to be looking here at least, at the very least, or very lowest time frame, at least the 1 hour. Okay, so when price is making lower lows, lower highs, it's constantly breaking structure to the downside, and all of a sudden we have an impulsive move, signs of strength that take out the most recent swing high or lower high. This will cause a change of character in order flow. So price is now trending downwards. It's all of a sudden broken a swing high point, and it's the first sign that the banks are making a reversal in price. Okay, think about this for a second. Retail trading methodology or principles will teach you to buy a broken resistance, because resistance becomes support. And this is where a lot of retail traders will now go and enter their buy positions. This resistance level has been broken, break and retest. We expect this resistance to turn support and hold, so we're going to put our stop losses just below, and we're going to target new highs, only to get liquidated and for price to go away anyway. How often does that happen to you? When we get signs of strength which cause a change of character, in other words, if you do know Wyckoff in depth, the validation of your automatic rally, your AR, there will often be some sort of consolidation after that. And this will also be an accumulation of orders, only to get liquidated. Price will most often tap into demand and then go long. Now, if you know Wyckoff, we will get an accumulation. So that could be price action moving sideways. We will get markup or discount, which could be your liquidity grabs. We will get then a distribution, a reaccumulation, liquidity grab again, and then a redistribution. Now, I hope I'm not going too fast. I don't want the video to be too long. But if you've got questions, you can pop us an email, drop a comment in the section below, and we'll be sure to get back to you. Ladies and gentlemen, this is where we as smart money traders want to enter the market. Okay, when we're looking for buys, we're going to be entering off demands. When we're looking for sales, we're entering off supply areas. These are easily identified when you look at the last downward move before the upward move which caused the change of character. It's the same on a sell setup. You want to look for the last upward move before the downward move that caused a change of character to the downside. That would often be your supply and demand areas. And we want to wait patiently for retail traders to get liquidated. Banks are going to collect liquidity. And once we enter our supply and demand zones, this is going to be known as a POI, our point of interest. Now, we've seen this on the 1 hour. When price hits our 1 hour supply and demand, you want to be dropping down to a 5 or a 15 minute, nothing lower. And look for the same thing within our point of interest. You're going to see a change of character happening before you go long. You don't just let it tap and buy, you wait for a confirmed CHOCH before entering. Okay. Now, obviously, emotions get the best of us. You might take a risk entry. That's all right. If your risk management is on par, that's okay. But what I'm advising you today is going to help you cut out 50% of your losses. All right, I hope you enjoyed the video. Let's just have a quick look. Now, I want to show you what happened last week. We are on a 4 hour. We could go to a 1 hour, just to give you an idea. If we zoom out a little bit, you can see that the price of NASDAQ broke structure last week to the downside. We broke down even lower. So we had a break of structure here. We constantly broke structure. And this last point, which broke structure over here, was this swing high over here. We then saw a change of character, which happened over here with signs of strength. Look what happened when price came to retest the demand. We saw a wonderful reaction over here. First we saw some reaccumulation. Retail buying. They get liquidated, tapped into the demand, and we went up 5,000 pips. So with a 0.02, that's already $1,000 in one trade. Follow this principle and you could make $1,000 a week waiting patiently for setups on the US30 as well as the NASDAQ 100. I hope you guys enjoyed the video. Don't forget to like and subscribe and drop your comments in the section below. Until the next video.
Make a statement. Everything I do so instinctive and so passionate. Every word I move so descriptive like an adjective. I got a vendetta against people who patented being negative when you should be getting after it. I got facts over tracks, this and that. Spitting slow, spitting fast. I could roast, I could gas. Think I'm okay at last, but I don't know if that can erase